Is this finally the moment the mighty Dutch economy starts its decline? Once celebrated for its economic strength, the Dutch economy faces new challenges. Keep watching to understand the potential impact of the Netherlands' economic slowdown and its implications. Are economic experts right about the Netherlands, or is there more to the story? From analysing the latest data to reviewing all the research and raw economic data on the Netherlands, we've left no stone unturned to bring you this comprehensive analysis. This is the Netherlands, centrally located in Western Europe and bordering the North Sea, making it a key player in European maritime trade. A nation historically at the forefront of global trade and innovation, and an economic powerhouse among the West. In recent years, though, this picture hasn't looked so optimistic. Instead, the country known for its economic strength and resilience may suddenly be finding itself in the throes of an economic downturn, and even a recession. The latest figures paint a concerning picture. Between July and September 2023, the Dutch economy shrank by 0.2%, a continuation of an already downward trend from the last few quarters. Its growth rate, too, the heartbeat of any economy, has plummeted. After enjoying a healthy 4.3% increase in 2022, forecasts suggest the Dutch's economy GDP came to a sharp halt, slowing to just 0.6% growth in 2023. And these numbers reflect a broader economic decline impacting all Dutch society. The Dutch economy also wasn't immune to the challenges posed by the COVID-19 pandemic. Like other nations, it has since struggled with massive inflation, harmful to the well-being of any advanced economy. Inflation reached an astounding peak of 14.5% last year for the Dutch, but what lies beneath these troubling trends? As we dive deeper into the current economic landscape of the Netherlands, we find ourselves looking at a pivotal moment in its economic history. This is crucial, not just for the Netherlands, but for the entire global economy too. We must ask ourselves, is the mighty Dutch economy finally on the decline? In order to understand not just the what and how of the Netherlands' current economic climate, but also the why, we have to rewind a little bit. For centuries, the Netherlands has stood as a source of economic might, which only makes its current slowdown all the more striking. Is the world's most globalized country finally hitting its limits? The story begins in the 17th century with the Dutch Golden Age, a period where the Netherlands just didn't thrive, it dominated. The Dutch East India Company, a titan of trade and arguably the world's first multinational corporation, was at the heart of this era. In this period, the Netherlands set the standard for global trade and economic leadership. Moving into the modern era, the Netherlands and its economy continued to evolve. The discovery of natural gas in Groningen in the late 1950s marked yet another transformation, bringing a wave of industrialization. At the same time, the Netherlands shifted towards a service-oriented economy, with emerging finance, logistics, and technology sectors. However, the journey wasn't without its hurdles. The oil crisis of the 1970s brought economic stagnation, with soaring unemployment, inflation, and what became known as the Dutch disease. The influx of revenue from natural gas had led to a stronger Dutch currency, making other exports pricier and imports cheaper, which hurt the competitiveness of traditional sectors. Then, more recently, there was the 2008 global financial crisis. While it certainly upended the entire global economy, it also tested the resilience of the Dutch. However, the Netherlands was relatively well prepared to weather the financial and economic crisis, and, in the end, made it out in relatively good shape, an impressive feat to say the least. The historical context is crucial for understanding the current economic predicament. This isn't just a blip for a minor player, it's a moment of uncertainty for one of the most economically successful nations in the world. Why is it that the Dutch economy, one with such a robust history of success, is doing so badly? And what does that mean for the future of the Netherlands? What happens next? To get a good idea of what's taking place within the Dutch economy, we need to take a comprehensive look at the data, starting with GDP, or Gross Domestic Product, a crucial indicator of economic health, which shows the Netherlands grappling with a sharp downturn. For almost all of modern history, the GDP of the Dutch economy has been on a constant increase. The only large contractions have taken place with economic crises, namely the 2008 financial crisis and more recently the COVID-19 pandemic. When we look specifically at the growth rate of GDP year to year, a slightly different picture emerges, with much more irregularity. over the decades a trend of generally slowing growth becomes visible, as well as smaller, harder to notice contractions in the early 1980s and early 2000s. Especially clear is the massive impact of COVID-19, given that in 2022, Dutch GDP contracted by an enormous 3.9%. Recent years have fared better, with the Netherlands economy recovering to grow by 4.9% in 2021 and 4.5% in 2022. However, the outlook of the future is not as positive. The anticipated growth rate for 2023 hovers between a mere 0.4 to 0.9%, a drastic shift from the country's previously strong economic performance. Clearly, the COVID rebound seems to have ended as quickly as it arrived. Originally, early predictions in March had forecasted an expansion of 1.6% in 2023 and 1.4% the year after. But instead, growth is set to drop to 0.7% in 2023. While there is still potential for the Dutch economy to hit the 1.4% mark in 2024, there is plenty of uncertainty. Getting finer and finer grained, quarterly figures make clear the conundrum. The Eurozone's fifth largest economy entered a recession in the first half of the year, as it shrank 0.4% in the second quarter, after a 0.5% contraction in the first 3 months of 2023. Meanwhile, early numbers for the third quarter of 2023 show a 0.2% contraction in GDP, hardly a welcoming sign. Then there's inflation. High levels of inflation add another layer of complexity to this scenario. Historically, inflation has been little cause for concern in the Dutch economy, that is, until the COVID-19 pandemic and the global economic crisis it brought with it. In 2021, inflation began climbing rapidly, and by September of 2022, it reached its monthly peak at 14.5%. Although, after a record year-on-year high of 11.6% last year, inflation is projected to come down to 4.2% in 2023. Yet, don't be fooled, as it still continues to exert pressure on the economy. Inflation is falling mainly due to lower energy prices and in part because the economy itself is cooling down. In fact, worryingly, underlying core inflation, which doesn't include price increases for energy and food, was projected back in June to rise to 6.8% this year, 2023. And without the contribution of energy prices, Dutch inflation is significantly higher than that of its European neighbors. In the second quarter of 2023, for example, the difference in core inflation was more than 2 percentage points. Part of the reason for such high core inflation than its peers has simply been temporary factors. For example, a return to standard tuition fees bumps up the figures. Still, the prices for goods and services that make up core inflation have risen by 11% in the Netherlands since the end of the pandemic, compared with 7% in the euro area. Food prices too remain quite high. Oddly enough, while slowing GDP and a persistent inflation suggests a contracting economy, the Dutch economy also displays signs of overheating. The IMF's positive output gap for the Netherlands confirms this, indicating a higher degree of economic overheating. Part of the underlying cause here is higher wage growth, driven by a tight labor market and higher inflation, which in turn further fuels core inflation. Now, one of the most direct effects of high inflation on the Dutch economy is its impact on consumer spending, another crucial indicator of economic health that we have to take into consideration when looking at the Dutch economy. And there, the data also paints a picture of decline. In September 2023, household consumption was down by almost 2% compared to the previous year, a clear sign of consumers spending less amidst a great deal of economic uncertainty. It was the steepest contraction in household consumption since February 2021, as consumption declined even more for household goods, to -4% from -1% in August. This was weighed down by the sharp decreases in both durable consumer goods, -4.3% from -0.5%, and other goods, -7% from 1%. Meanwhile, consumption fell at a slower rate for food, drinks, and tobacco. Although there was a slight uptick in consumer spending in August 2023 compared to 2022, this is a far cry from solid growth. In fact, when we zoom out and look at the trend of consumer spending over the last few decades, the sharp decline and then plateau of the last 2 years is just as significant as the decline surrounding the 2008 financial crisis. Unfortunately, consumer confidence throughout the Netherlands fits nicely with these figures. The Dutch people simply don't feel optimistic about their own economic situation. The consumer confidence indicator in the Netherlands inched up to a 5-month high of -38 in October 2023 from -39 in September. But even so, it remains far, far below the average over the past 20 years of -10. Compounding the issue is the state of Dutch exports, which have also experienced a downturn, with a near 5% drop reported in September 2023. They also declined 14.4% on the year, due in part to 15.7% lower sales in the EU, and then 12.2% lower sales to non-EU countries. What does this mean for the economy, you might ask? Well, such a decline in exports likely signifies economic issues for its main trading partners. It also potentially indicates a sharp decrease in industrial production, as sales decreased for most mineral fluids, lubricants, and similar products, down almost 45%. This is especially problematic, given that these are the Netherlands' largest category of exports, representing 22% of its export volume. Interestingly, although Dutch trade contracted, the net contribution of the trade balance to the GDP was actually positive due to a reduction in imports. Notably, goods exports and imports fell by -1.7% and -2.8% respectively, while services exports and imports contracted more mildly. Turning to another area of the economy in distress, the Dutch housing market has been in hot water as well. For years, low interest rates and lenient mortgage standards fueled a steep rise in property values, enabling buyers to secure homes with relatively cheap borrowed money. However, the tide began to turn in mid-2022 as interest rates climbed and economic prospects dimmed, leading to a cooling housing market. Despite a downturn in prices, the housing crisis persists, particularly for first-time buyers in the Netherlands. There's also a lack of sufficient housing, with as many as 390,000 homes needed across the country. Concerns over the issues have reached a tipping point, and although house prices have begun to fall, an increase in mortgage rates means monthly payments have risen, offsetting any improvements in affordability. Tighter household budgets too, which as we've seen have been strained by the economic downturn, only worsen the issue. Together, the combined effect of high inflation, subdued consumer spending, and a housing crisis are all evidence of something no Dutch citizen wants to hear: recession. As reflected in the consecutive quarters of negative growth that the Dutch economy has seen in 2023, the Netherlands is officially in the midst of a recession. However, it's not universal across the board. In fact, the Dutch economic landscape is actually more like a patchwork, with varying levels of contraction and expansion across different sectors and areas. Manufacturing, which initially showed growth, now struggles with rising costs, supply chain disruptions, and weak demand. Dutch manufacturing is projected to contract in 2023, with only a slight bounce back in 2024. Then there's the retail sector. Despite seeing a boost from e-commerce, it's also facing challenges, largely due to inflation affecting consumer spending, and as evidenced by a big drop in retail sales volume, the first in a decade. ICT, construction, and business services, including trade, transport, and hospitality, have experienced slight contractions as well. On the other hand, certain industries like energy supplies and recreation and culture are on a more pronounced decline, with the energy sector shrinking by 7.4% and recreation and culture by 2.5%, quarter on quarter. Conversely, mining and quarrying, particularly oil and gas, is a standout with an impressive 11.5% growth, signaling robust demand. Other sectors have seen mild growth as well, including financial services, real estate, and public sectors, helping to somewhat stabilize the overall economy. Agricultural exports in particular have been a massive source of help, given high export prices. Although the current state of the Dutch economy is a mix of struggling and thriving sectors, each navigating the economic downturn in its unique way. Yet, it's not all hopeless for the declining Dutch economy. While the economy faces recession, its unemployment rate points a somewhat positive picture of the labor market. The Netherlands' seasonally adjusted unemployment rate ticked down to 3.6% in October 2023, from 3.7% in the previous month. And really, it's been fairly stable since quickly recovering from the economic effects of the pandemic. Meanwhile, the labor force participation rate edged up by 0.1 percentage points to 75.8%. This stability in employment and the labor market, even in the face of economic downturn, is certainly a positive sign. The unemployment rate is predicted to remain around 3.7% in 2024, while price increases and labor shortages in various sectors will drive up wages by 5.7% in 2023. For 2024, forecasts also expect substantial wage growth of 5.4%, but that'll likely begin to moderate to 3.7% in 2025. All in all, the picture is one of a healthy labor market in general. With all this in mind though, one thing is clear: the Dutch economy is in decline. So, where does it go from here? The outlook of many is one of deterioration, though others, while cautious, aren't devoid of optimism. Many economic analysts, including those with expertise on the Netherlands, suggest this might not be the start of a severe crisis, but rather it may just be a period of stagnation. Still, only time will tell. With a labor market that's strong and vibrant, as we can see with its low bankruptcy rates and more vacancies than unemployed, there's the potential for recovery. As it stands, projections expect a modest GDP growth of 1.2% in 2024 and a slight improvement to 1.5 or 1.6% in 2025 and the years to come. While it's still not a sign of a healthy, booming economy, neither is it an economy in crisis mode either. However, inflation is still expected to remain high, with an anticipated rate of 3.9% in 2023 and 3.8% in 2024. Increasing poverty rates could be another issue, with some urging the government to take action in order to prevent a spike from 4.8% of the population to 5.7% in 2024. These projections point a vital need for strategic economic policies that support growth while addressing inflation and poverty risks. In the end, the Netherlands, officially in recession with consecutive quarters of decline, faces a mixed future, with consumers and policymakers alike hoping for relief. Economic stagnation is clearly present, yet the labor market is one of few potential silver linings. In the coming years, some modest growth is expected, but challenges like persistent inflation and potential rises in poverty loom large on the horizon. So, what will happen to the once mighty Dutch economy? At this point, it's a case of wait and see for what comes next, and really, only time will tell how this story unfolds. Thanks for watching.